Ladies and gentlemen, welcome back to TMP Finance, where we make long and short-term investing simple. I want to talk about yesterday and today. I was supposed to make a video yesterday, but unfortunately I was having some technical issues, but we are back now more than ever. So let's talk about yesterday. I did have a very strong bias that we would have a red day, and that's what we did have today, and it was based off this one thing. Now this is a very common pattern that I do see, and it has a very favorable rate in terms of win rate. So this is what I'm looking out for. It's kind of the stall out where you start to see buyers in the market drop and you start to see more sellers just gradually and gradually. Now you can kind of think of it as a loss of momentum. Like, let's say that you're throwing a ball in the air, right? You have this arc where it reaches the highest point, and that's when it starts to taper down slowly, and that's when it starts to fall off. This is the exact same thing that I was seeing in the market over here, where you have an influx of buyers and then less and less, and that's when you start to get a good rejection there. Now you can also see this example in the top of the market over here, and this is it definitely gives you a lot of time to react to this as well. So that's why I like this. It's not like it immediately happens like a support or resistance touch. It's very gradual, and it gives you a good time to set up and figure out where you want to take your stop loss as well, and where you want to take profit. So a good thing, another example could be seen in the top of the market like this, and this is a pattern that I will be keeping an eye out for in the future as well, because I find that it has a very successful win rate. So that is what you are all looking for now. Now that being said, we did have a very good way that we could have broken out this downtrend here, and that was with the Trump tweet over here with that 12% day. This is a lot of momentum. Now, if I'm not seeing a break to the upside, that's when I start to get a little skeptical if we're really back, if the bulls are really back in the market. So we had a lot of chopping around within this one candle inside this range. I'm not really liking that too much. I do want to see a break to the upside if we are bullish, and that's all you're looking for. If you're a bull, you're looking for that break of resistance above here, and that's when we start to move up to the next support at 20,000. Most likely, if we do get that break, we'll probably reach a new all-time high before we get a move lower than the previous low over here. But again, the bear scenario is more likely in my opinion, and you're going to get a decent risk to reward if you're shorting below this 20,000. Sorry, not the 20,000, the 18,200. This is the critical support right here, so if we start to move lower, you are looking to place a short trade down below like this. I am looking to take profit around here. This is a very light area from the market here. This is very safe. Or if you're being a little ambitious and you're not really feeling the market conditions too much, you can't expect to make a new lower low in this pattern of lower highs and lower lows in the bear market. And your stop loss is very tight here, just following this falling resistance, and that's pretty much what you're looking out for here. I do want to mention, I am a support and resistance trader, but not all support breaks you're going to take or resistance breaks you're going to take. So for example, let's take a look at Microsoft. This was my original resistance line drawing over here, and we did receive this break. But here's the thing, when I see a very high influx, and yes, I am looking for momentum and volume when it comes to breaks in the market, but when I see a huge break, I'm not taking that. It's kind of like the same idea as order blocks and that kind of stuff. If you see, you know, this huge order block there's a very good chance that the price will return to that area as well. So I'm not really liking this break here, and it's very simple. Now that I know that we can come up to this level here, that this is boundaries for a downtrend here, I'm going to readjust my resistance, my falling resistance line back up to this point here. Now this will be my breaking point for when I see a market reversal. That is the line that I'm looking for now. So I'll correct that, and I'm not going to take a trade that is, you know, a 10% day or something crazy like that, because it's just not realistic and it's not sustainable to have a trend reversal from. So let's take a look at Apple and Nvidia, and we can see that both of them here, they weren't very close to breaking resistance as well. So that's another very key indicator that, you know, you're not really looking for the market to flip just yet. Again, it will in due time, and get ready for when it does, but right now I think we are still due for either some more consolidation or continuing that downtrend a little bit more. But that is what you are looking out for in the short term when it comes to trading the NASDAQ and the stocks surrounding the NASDAQ. But anyways, if you guys are interested when it comes to trading and improving your trading game, you can come take a look at the link in the description, wap.com/tmpfinance, and from there you'll have access to our exclusive Discord, where we're currently beating the market before leverage, my normal 9 times leverage, by 25.25%. The NASDAQ is currently, the S&P is currently down 10.1%. And we're currently beating the market while everyone's in the red. So if you are looking to become a profitable trader and you are looking to get all the trade alerts, risk allocation, hot stock picks for each month, and also free one-on-one sessions, come take a look at us. But anyways, that's gonna be a wrap for today's video. Until next time, and we will see you soon. Peace out, y'all. Take care.